Here we go. Okay. Anyway, this is technically fully compressed, except for the top few bands here. But I think there's more to the picture than that. Since these moves tend to be cyclical in regards to how price tends to recover, um, very uniformly, in fact, I'm going to surprise you. Ready? Okay. So what happens when Bitcoin goes for a run? You get sweaty. No, I'm sorry. He becomes overexpanded. When that happens, what do we see? Slow trickle down on price while staying above the longest overexpanded period, which honestly is irrelevant because it's maxed out. Anyway, it slowly trickles downward. What happens then? There is a sudden expansion to the downside, followed by compression. During this compressionary period, nothing happens. Okay? How long does nothing happen for? About half a year. Nothing happens. Then we get ourselves a nice little price spike, right? And then what happens next, right? Then we're saying, oh, Bitcoin is fully compressed. Look at this wave PM. Look, everything is below 0.97. And that's great. Good news. So this means that Bitcoin can go for a run, right? Technically, sure, yes. But does it? No. Which way does it expand? Bearishly, right? After you have, let's use a Fibonacci retracement because I just find that funny. Look at this Fibonacci retracement. Oh boy. Drawing our lines. Look at the rainbows. Beautiful. What do we see? Did I do this upside down? It's been so long. When was the last time I used this tool? No, that's right. Okay. Sure, whatever. My point is, price retraces. Cool. Up to this yellow line. Let's do it again over here. Right. From the beginning of our move over here to the top of our move. Somewhere over here. Are you stuck now? Can I not move you forever? All right, goodbye. Try that again. Up we go. Beautiful. Anyway, my point is, why did I do that? No reason. My point is, price goes up, it slowly descends, nothing happens. Yeah, let's do the side by side because that makes more sense. Right, price runs up, price runs up. Slow trickle downward, slow trickle downward. Nothing happens, nothing happens. Sudden bearish spike to the downside, which happens right around here on our 3-wave PM, right? Because what happens about these periods? I'm glad you asked. You have room for short-term expansion, but that short-term expansion can't push past volatility overhead. Okay. So you get a very brief, short downward thrust, which we call despair. And then nothing happens again. Nothing happens again. And then you have a nice recovery. You have a nice recovery. Okay. And at this point in the cycle, we say Bitcoin is ready to go because wave PM is fully compressed. Look at that. Look how nice and fully compressed Bitcoin is right here. Look how nice and fully compressed Bitcoin is right here. Okay, do you see my correlation? Right? Where you have full compression and compression continues. Until what happens? Well, everything goes below 0.4. Because why have a bit of potential energy when you can have a stupid amount of potential energy? Right. So essentially, to this point, it lasted 2 years. What happens again? 1,000 days, right? 1,000 days before this really kicks off again. So if we go over here, from here to the point of compression, 2 years. And now that we're at the point of compression, we have the technical reasons to say, yes, this could expand very rapidly. Is there volatility overhead? No. In each instance, we can expand very rapidly. So, why don't we expand? Accumulation. That's where we're going to go with, accumulation. All right. If you have high potential energy and you can accumulate price and keep it nice and suppressed for as long as possible, when you start pushing, it's going to take very little effort to actually push price. As the order books concentrate directly around where price has been, very little order flow expected outside the range. So once price starts to get moving, it gets moving. All right, as soon as we see Bitcoin, this is going to be my prediction, okay? Where we just trickle down and then kind of trickle up. How long does that take? Year and a half. Okay. What we're going to see, price is going to trickle down. We're going to do a little scoop. And then here, and the price is going to go. Composition says, hi, Shark. Hello, composition. What are you composing? Or are you simply the piece of art? Ah, beautiful. Let's look at your questions. What questions do you have? Can I look at NVIDIA? Oh boy. Oh boy. Didn't we look at this last time? What was my last stream? August 1st. No. June 28th. I remember this chart. Boy, howdy. These were the days. You are the work of art. Composition? Yes, you are. Hindsight's 2020. I was really interested in playing this. Back in my day, shit, okay. We're on the weekly, man, and we're maxed out. I don't know what I can do for you here. Quite the earnings jump. Like, all I see is we have this cute little mean reversion that starts here and then completes laterally. We just don't have any higher time frame mean reversion to base this off of, because our look back is 100 candles. Here, right? What do we define as normal in the last 100 candles? Oh, I don't know, this. So if we're defining that as normal, our indicator says, oh, green, this is normal, right? This level of volatility is what is typical for this chart. And it doesn't get better on a higher time frame because we get even more volatility, right? How ridiculous is this? Where you have a massive move of 250% since the beginning of the year. Jesus Christ. 250% move in a few candles, right? Our indicator is going to say these kind of moves are the status quo, which is why you see green all the way up. Anything you do here is going to be entirely fundamentally based. And that is not my forte, which is why I trade crypto, because the fundamentals are absolute ass. Now, all we can really do is go on the weekly and draw lines and say, look how this went up, and then it kind of did this. And look how this one went up, and it kind of did that. Wow. No. I would err on the side of caution trading charts like this. It's just not my type of play unless you actually have reasonable technicals based off of like the 3.2 standard deviation belongs to over expanded period. That's going to work great. Okay, next up, Link. What's on the daily chart? This is fuzzy. Very weird downward trend. Very clear thrust and mean reversion. That was a good play. Didn't we go over this? We did. We totally talked about shorting this our last live stream. Strong fundamentals for crypto, exactly. Right? It's all vapor. It's like if the government collapses, Bitcoin is going to maintain its superiority because it doesn't have any regulation. Which is, like, I mean, sure. Right, Bitcoin's fundamentals are hypotheticals. I probably just chose the most extreme example possible. But you know what I'm saying. Right, people are optimistic, and that's what keeps Bitcoin going. Yeah, no, I should have actually called this. That's super clean. I mean, like, what are you doing here? 5% over 15 days? Yeah, it's just a simple mean reversion. And yes, it's super reliable. That's all you need to do to make money in crypto. Although I think I actually said to short it from top of the CLCP, which probably would not have entered. So yeah, sure. Condition completion. Just for my personal risk tolerance, I like to be on the swing high of the bearish move. So even if I called this, you probably wouldn't have entered. Because my entry conditions have been here, that range. Or, sorry, more accurately, this range. Like that. This is new, though, on the 1 hour chart. This is tradable information. If you do have a short open, you can keep your short open knowing you have a very clear technical to keep your trade open. Right? Longest over expanded period is 220. What do we see? Price below that line. Good. Stay in the trade until this keeps going down. When it enters, then you stop out. Nice chart. The big economy button. Goodness gracious. Is this the end? Nah. You guys know my prediction. Shit is fucked before the end of the year. But it's probably gonna be from up here. Retest prior high. Then shit is fucked. I'll be honest, I kind of just have my money in a high interest saving account right now. That and dollar cost averaging into Bitcoin. Like, yes, index funds only go up. There's a very good reason for that. Like, take General Motors, right? That wasn't a major index. General Motors goes bankrupt. Everyone holding General Motors stock shut out of luck. Anyone holding the index it was in, they're fine, right? Because the index tanks a bit. And then GM gets replaced with a stock that is a winner. And now you have a new winning stock swapping out the one that is now defunct. And that one goes up because it's doing well, right? You only have stocks that perform in an index. It's mind-numbingly eternal. The only way an index goes down on a massive time frame is if people buy less things and you have less people in your country. So maybe in the next 30 years when we're a deflationary economy, but that's not relevant to us at all. And because you know damn well there's going to be tremendous effort than any kind of downward spiral like that. And let's be honest, if that ever happens, you have bigger problems than the stock market. Okay. How do things look in the short term? You got a little bearish move. How about that? This is just a classic mean inversion, right? What do we see? Price dances on a line. It crosses over the line. Price goes to the mean. Beautiful. That's good shit. Check out the British pound. Oh. Daily chart. Slow trickle uptrend. Really clean mean inversion. Right? Enter, retest, long. For our chart, we got nothing. Almost complete compression. If this goes sideways for another few days, there might be a play here. Check back. Cool. That's it. I'm leaving.